Inventory falls to 6-month lows, but will that translate into a more robust market? I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, August 29th. We know that buying or selling a home can be very stressful and confusing. That's why we do these weekly videos so you can know how the market is impacting your options as a home seller or buyer. This week, the active inventory fell to 59 homes, down from 67 last week. The average asking price is $1,176,000, down just slightly from last week's $1,842,000. 9 homes went pending, 2 less than last week, so pretty close. But the more important number is the average asking price of those pending sales, which is up to $2,054,000, up significantly from the average asking price of $1,759,000 last week. And about half the homes closed this week as compared to last week, with an average asking price pretty close, or closing price, I should say, relatively close, $1,881,000, down from $1,927,000 last week. So now that we know how the market performed this past week, we can look at the broader indicators that help us know where the market might be heading. Before we do that, if you find this information helpful, why don't you hit the subscribe button down below so you don't miss out on future updates. And while you're at it, share it with a friend. Everyone deserves to be in the know about their local real estate market if you find this information helpful. Okay, let's look at the market indicators. Inventory finally fell below 60 homes. This is the first time it has been below that mark since March of this year. Part of that is due to sellers deciding to remove their homes from the market instead of seeing them go pending. But regardless of the reasons, having the inventory fall will improve stats and change the overall feeling towards the market. It is still significantly higher than we saw inventory at the end of last August, 45 homes-ish, but it's moving in the more desirable direction for maintaining home values. With the second week of inventory reduction, the turnover rate has started to improve. It's still a very slow 50%. There's our 50% line. We really want to see it get up to this 100%. At least. So it is still very slow at 50%, but in a few weeks, it's much better than we saw a few weeks ago. And hopefully we will see this number continue to improve to over 80% in the coming weeks with inventory continuing to drop. The over-under number continues to struggle this week, dropping to 1.5% below the average asking price. That's still within the 2% margin of error that we consider a more neutral market, but it's obvious that most homes are not generating strong enough interest to generate multiple offers, which is the primary reason why we would see closing prices return to that over range. On the other hand, we did see some improvement in the average sales price. And when you consider the average asking price of pending sales this week was over $2 million, I expect to see the continued improvement in this sales price stat over the next several weeks at least. The QQQ fund had a bounce back week, improving 2%, the 2% that it had lost the previous week. Seeing that this trend line is a steady and consistent slow growth, it gives me confidence that we will continue to feel insulated to some of the more extreme forces of the market that we're seeing affect housing markets outside of our area. Silicon Valley money continues to grow, giving our buyer demographic the ability to move forward with their searches here in San Ramon. And finally, interest rates. They made a very, very slight movement down again this week, just 2 basis points. But the general consensus is that we will be there will be movement at the federal level to finally start reducing rates. When rates drop, I do expect to see significant increases in the housing market, both in homes becoming available and also buyers jumping back into the fray. The big news this week is that there is finally some sustained downward momentum in the inventory levels. If they return to the 40 to 50 range, then I think we are going to be looking at a much healthier market in general. All the other indicators made such tiny movements that there isn't much to glean from them, but the inventory levels dropping is the big thing to make note of. Let's see if that helps to kickstart a solid end of summer market. Thank you for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We are here to help guide you every step of the way. Have a safe and fun 3-day weekend, and I'll see you next week with a new update.